Hey guys, hope you're doing well out there. It's time to check in with shares of Nike that are sliding more than 12% in the after hours, getting south of $85 a share. From a technical perspective, this one has now just breached a 30-year uptrend. And so we have to ask the question, what do you do if you own shares of Nike? Do you come in here and offload your shares as you expect this one to continue to head lower? Or perhaps do you come in here and buy the dip? We'll certainly look to answer that. We'll also look to answer what is causing such a significant sell-off in the after hours. Now, year to date, you have seen a 13% decline in your shares of Nike over the past 1 year. You're down more than 17%, and now in the after hours, you add on another 12% decline, breaking through your 52-week lows. So you have seen significant underperformance in shares of Nike, especially when you compare itself just to the broader S&P 500. Now, that is for good reason, as you have revenues coming at $12.61 billion. That was a decline of 1% year over year. 1.7% year over year. What's even more significant is that was a miss on Wall Street estimates by roughly $250 million. What I want to point out is 3 out of the last 4 quarters, this is a company that has missed on revenue expectations, and that is certainly not a good look for management. This is a company that's been really known to come in with consistent beats both on the top and bottom line, and when you miss revenue expectations 3 out of your last 4 quarters, that is certainly not a good look over at Nike, and something I think management can do a better job in tamping down those analysts' expectations. Now, what we did get was a non-GAAP EPS beat of roughly 17 cents, as you had non-GAAP EPS come in over $1, where estimates were closer to 84 cents. So this is a company that's, again, known for their consistent bottom line beats, and they once again came in with a huge bottom line beat. And really over the last 16 quarters, you've only seen one bottom line miss. So while they're continuing to beat on those bottom line estimates, this is a company that needs to get back into beating their top line estimates and really getting those analyst expectations corrected. Now, we'll get into their Q4 results in just a minute, but what I want to jump into is the fact that we got revenue guidance for the upcoming fiscal year in their conference call, and that is, in my opinion, really what sent shares lower, as you're expecting full year 2025 revenues to now decline in the mid-single digits. The analyst expectations were for a growth rate of nearly 1%. So again, this just basically highlights the point that management needs to do a better job in telegraphing revenue expectations. How do you suddenly expect a decline in mid-single digits, where really over the past few quarters you've been expecting growth over the next year? Similarly, in the upcoming Q1, you're expecting revenues to go down by roughly 10%, whereas the estimates were for a decline of close to 3%. So significant declines on that revenue side you're expecting, especially in the first half of the upcoming fiscal year. And then for the full year, you're still expecting mid-single digits declining revenues. And so as we look ahead for the next few years over at Nike, I think the expectations will once again have to be tamped down, and the stock will have to certainly be re-rated. As we see for the upcoming fiscal year, revenue will fall underneath $50 billion, and then there's no way this company will be able to put up a $55 billion year in the following fiscal year. So you can probably expect your revenues to really come down across the board over the next couple of years, as you have now an expectation for declining revenues by close to 5%. Where this company still continues to chug along, in my opinion, is on the bottom line profitability side, as they're still expecting gross margin expansion. Despite the declining revenues over the next year, they still expect roughly a 10 to 30 basis point expansion on their gross margins for the full year, and then for the upcoming quarter, gross margins to stay roughly flat. And so the way this company is really able to achieve and maintain their bottom line profitability despite expecting revenues to be down significantly is through cost reductions and cost cutting plans, as they have a $2 billion cost cutting plan, and they're reducing jobs both in the US and at their European headquarters. And so while I do think this is a good plan in the part of management in order to maintain costs and really keep them in check and maintain profitability, I do think the declining revenues speaks a bit more to how management is running this company. I think the innovation over at Nike simply has been lacking, which again leads to something like a revenue guidance cut, leads to something like a nearly 10% decline in expected Q1 revenues. And simply cost cutting over at Nike won't be enough to propel the stock to new highs. I think this company needs to get back into growth, especially on that top line, as that's really what Nike has been known for over the past. Now, what you still do get with Nike is consistent years of shareholder return. So they have 22 years of increasing dividend payments. We know this past year, dividends were up roughly 8% from a year ago. And then in terms of a share buyback, they bought back close to $1 billion just in the most recent quarter, retiring close to 11 million shares, and they still have nearly $9 billion left on their $18 billion share buyback that they authorized roughly 2 years ago. And so certainly this isn't the concern over at Nike. I think you can continue to expect those dividends. You can continue to expect share buybacks. What we really as investors over at Nike have to see is this company get back to revenue growth and revenue outperformance. Along with that, they have to come in with revenue beats quarter in and quarter out. And they certainly won't get to that point through cost cutting. They have to continue to invest in their athletes, continue to invest in marketing campaigns and advertising campaigns, continue to invest in innovation and bring that Nike brand forward. Now, what you did see was a decline really across the board in all geographies outside of China. So China being a really important market for Nike, they did see a nearly 7% growth on that constant currency side. That on a reported basis comes down to 3% as you have a really strong US dollar over the past year. And so on a constant currency basis, you do have stronger growth rates than just on a reported basis. So keep that in mind. Really, across all geographies, you will see that constant currency number be stronger due to that US dollar being stronger itself. And so 7% organic growth in Greater China, that certainly is pretty decent, I'd say, for how bad that economy and really that geography has been struggling over the past 1 year. I'd say 7% growth year over year, probably a good sign in terms of Greater China. Where they still are struggling is North America, as you saw a decline in revenues, nearly 1% year over year. Similar story on your full year revenues, as that was down close to 1%. Similarly, in Europe and Middle East, just 1% revenue growth. Again, when you include that Forex fluctuations, revenues actually declining roughly 2%, and on a full year basis, basically sitting flat year over year. And where you did see some modest growth was in the APAC region, as you have revenues on a constant currency basis rising roughly 4% for the full year, up nearly 5%. So I think this company really is losing ground in North America and in Europe. You have a lot of competition, especially in their footwear, from companies like Hoka and On. And if Nike doesn't continue to innovate on their footwear, on their apparel, and they simply look to just get their way through by cost cutting, I think they will certainly lose ground and lose market share to their other competitor brands. And so the story over at Nike has always been innovation, and I think this is just showing that it will continue to be innovation. And certainly we have to see that. Management continues to certainly talk about it, but we will have to see that be proven out. Where you also are seeing a decline in Converse sales, as that is down roughly 17% year over year. And so outside of just the Nike brand, they are seeing struggling Converse sales, leading to lower revenues. So from a geography perspective, the fact that they're losing ground in North America and Europe, not a good sign, but still able to maintain their market share, I'd say, in China to at least a decent extent. Now, what you on top of that are seeing is extremely strong cost controlling over at Nike, as despite declining your revenues by roughly 2% year over year, you actually brought down your cost of sales. Part of that is probably inflation coming down, as that was down roughly 4% year over year. And so your gross profit, despite declining revenues, actually ticked up roughly 1%. And similarly, your gross margin coming up 1.1% year over year. Along with your cost of sales coming down, you also brought down your demand and creation expenses. That was basically flat on a year over year basis. And then your overhead expense, this is basically your employees and your SG&A costs, coming down 9% year over year. And so total admin expenses and basically total operating costs coming down 7% to now just make up 32.4% of your revenues. Last year, they were making up more than 34% of your revenues. And so this is a company that was able to balloon nearly 45% on their net income. And so while we see this company from a bottom line perspective looking absolutely stellar, as you have net income come in at $1.5 billion, last year you were at $1 billion, I think it's safe to say all of that is done through financial engineering and cost cutting over at Nike, and really none of it is organic. Really where this company will shine is if you can expect your revenues to continue to grow over the next few years while keeping the costs in check. Yeah, that is a recipe for success, and that is how you see your shares continue to move higher instead of trade lower. Part of me feels Nike's strategy, at least at the current time, is to play defense, as they're looking to be in cost-cutting mode rather than play offense, where they're looking to spend on advertising campaigns and looking to grow their revenues. Really similar story on a 12-month basis, as you have flat revenues but higher gross profit by roughly 3% on expanding gross margins. And then again, your net income up 12% year over year, coming up to $5.7 billion. And the fact that this company continues to post a strong net income number really helps the thesis that they will continue to be able to pay off those dividends and continue to raise them and continue to buy back their shares, as this company from a bottom line perspective and probably from a cash flow perspective still looks phenomenal. In terms of their balance sheet, nothing to really worry about. They're sitting on nearly $10 billion in cash and equivalents, another 1.7 in short-term investments. Looks like some of those short-term investments just rolled on to their cash. They do also have inventories coming down 11% year over year, and so that is a significant number, as you have inventories come down to 7.5 billion. Last year you were at 8.5 billion. And so Nike reducing inventory by roughly 11% year over year on declining revenues really tells me that this company is having a significant amount of promotional activity, significant amount of markdowns on their footwear and apparel that again is causing inventories to go down significantly despite not being able to raise your revenue. So you're selling that inventory at a pretty heavy discount. Now, part of that is concerning. This company is having to discount their apparel and footwear in order to just move through those inventories. Shows me maybe they are losing a bit of market share to competitors and certainly losing that brand advantage. Now, you did bring down your long-term debt. Part of that did get rolled over into the current portion, otherwise known as short-term debt. So total debt coming in roughly at $8.9 billion, with $1 billion in that over the next 12 months. But from an asset to liabilities perspective, nothing to really be overly concerned about. What I would look to pay attention to is this inventory number. You don't want to see heavy declines in your inventories year over year while not being able to grow your revenues. That's just telling me this company certainly is losing their pricing power. Now, from a technical perspective, you were coming into this print basically making a symmetrical wedge. You broke through that first level of support and you decisively broke through this 30-year uptrend, and that was a level of support. And so now you're sitting right at $82, $83 in the after hours. Certainly breaking through this 30-year uptrend is not a great sign for shares of Nike. I think this one is destined to come back down into this green box where we have significant volume in this, basically call it $50 up to $70 range. And believe it or not, Nike certainly has the possibility to come back down to that level. And so while this might take a couple of stops along the way, I think this one is destined to come back and retest, call it basically $70 on the nose, as you will likely have analysts come in and re-rate the stock and certainly downgrade the stock over the next couple of days. So over the short term, I'd say shares of Nike probably not a buy, considering you still have close to 10 to 20% in downside before you come down to a meaningful level of support at $70. Despite that, I think if you are a long-term investor, I think picking up shares of Nike on this decline certainly can be justified. I think the problems and issues over at Nike certainly are fixable. Maybe you need new management to come in and drive innovation instead of relying solely on cost cutting. And certainly you have the financials over at Nike to back this company up. From a balance sheet perspective, they think this company still has a long runway ahead of itself. And so for that reason, I think from a long-term perspective, you can possibly see a reversal in shares of Nike and continue back in this uptrend. In the shorter term though, I have certainly lost faith in Nike, and considering the fact that management guiding for revenues to be down on a full year basis, especially guiding for first half revenues to be down significantly, I think they could have telegraphed these results a little bit better to soften the blow. That was my take on shares of Nike. Certainly in the shorter term, I think you can continue to expect some downward pressure on the stock, but over the long term, I do still believe this company has what it takes to right size itself. Once again, find innovation and continue to expand those top line figures. Let me know your thoughts on this one in the comments section below. Stay tuned on the channel as we'll be covering all the major US banks reporting their earnings just shortly in about 2 weeks. Subscribe if you haven't, hit that like button. As always, thanks so much for listening, and I'll catch you guys in the next video.